Well, I'm Hans Paul, CEO co-founder at Speed Legal. This is a business modeling session, and it's a workshop, so it's not intended to be a lesson. So interrupt me wherever you want, whenever you want, and whenever you have a question, or you shouldn't, understand anything. But the purpose of this session today is to get clarity about your business model. You may already have one, and we'll discover soon. And ideally, to build something people want, because that's the objective of what you're doing at your startup. If you think about the definition of startup itself, is a temporary organization in the search of repeatable and scalable business model. And that's why I think it's relevant to understand a bit more about your business model. A bit about myself. I'm a 5-time founder. I live between Italy and San Francisco. I'm really focused on the 0 to 1 part of the startup process. And in the free time, you will find me running in the mountains or skiing if it's winter. A quick agenda for today. I'm gonna tell you the difference between the business model canvas and the link canvas, which we're using today, and then deep dive into the 9 boxes, and then make it practical so you can work on your link canvas if you didn't have time to do it before, and then we discuss together and brainstorm about your business model canvas. And then we end up with some homework for you. So first of all, what's your business model? I'm going to give you 30 seconds to think about it, if you haven't already, and say it in 1 sentence. If it can help you, try to think who is paying for what and what's the added value. Why does it work better than something else? Almost ready? Oh, Mark?
Yeah. I can go for Mark, or yeah, I can go for in there. So our version of the business model is we let fund administrators provide on-chain fund admin services for fund managers using our platform. So usually, when we are asked about the fund, so the business model, we dive deeper in the sense that we say, oh, it's a SaaS model. We just let the fund admin charge the fund manager for the services, and we take a commission out of whatever they charge in there. But yeah, we are in the fund admin business there.
Nice.
Sure.
And
what is the depth we want to go?
What makes it better, or why is better than any other alternative?
Currently, there are pretty much no other alternatives in the space for automating the administration. But again, here, I'm probably getting a little bit confused, Hans, about the question about business model, because here it's a general question about the value proposition in there, or it's more about the pricing, like how is our business model in terms of pricing better than the
very
others?
Good question. So when an investor asks you what's your business model, I mean, my way of thinking about it is, who are you serving with what, and what makes you better than others? So it's a good way to engage with them, investors being new potential employees or new potential customers. Of course, there are many steps, the unique selling proposition, as you mentioned, value prop, and so forth, that we are going to talk about later. But I think, yes, the why, how you're better than others, it could be seen a bit as the unique value proposition as well. Okay, thank you so much. I mean, it was just a quick introduction to understand also what you're doing. But thank you so much, Ricardo, for diving deeper into this. Kalum, you're next on my screen.
Sure. So at Eucalyptus, we provide a pretty customizable white label energy and sustainability management platform to the energy consultants and sustainability consultants to then distribute to their end users, so that the businesses that they advise.
Okay, thank you. Guillermo?
Okay, so we help banks have access to all DLT digital securities in the European Union. So we provide them access, and the business model is through a tier level of integration, and then a transaction fee on volume. So I'm trying to address both sides, the value proposition and the business model.
So your customers are banks, if I understood correctly, and
Yes.
you're helping them get access to tokenized assets, or what?
Yes, to digital securities, we call them, because it's a new like EU authorized type of securities. Tokenization is MiCA, and we are only MiFID. It's a bit of a legal thing, so that's why we differentiate like that. So we give them access to all these digital bonds, digital shares, and all these new venues. So we take a transaction fee, a very small, and then an integration fee.
Nice. And when you say digital assets, you mean pretty much like RWA or something
Bonds
else?
and shares, yes. They're part of RWA family, but this is to make it simple. Is corporate bonds and shares of equity in companies.
So you cannot do right now real estate properties?
Could be, yes, but if they're listed in a public or EU authorized venue, because there are 4 right now, there will be more. If that company if it's a bond to do real estate, for example, can be done, or it can also be tokenized shares of a company that owns real estate assets. That's also possible.
Perfect. Thank you so much, guys. So I better understand also your business. How did you feel about that? Do you think it was a good pitch? I mean, good person, good. Do you think you could get a client interest or an investor interest out of this?
Generally not. I think here is the framing strategy. Like business model, no, it's not an elevator pitch. So I would say no. That they should already be interested before asking this question.
Yeah. But yeah, my actually understanding of business model, Ricardo, is the one that you should capture actually an investor attention, because actually the business model is your most important thing. You're not just creating a product, as you know, but you're solving a problem, and therefore the business model is telling your investor how can they make more money in a scalable way. So yeah, but again, this is kind of my way of defining this, but if you have a better way of defining your business model, it's great. It's difficult in one sentence. That's why it was also a bit provocative to start with one sentence, your business model. And the purpose of this session is actually to spend the next hour and more into this.
I like it, a new perspective. Yeah.
Cool. So who of you have a business plan or have drafted a business plan? I can see
business / finance plan, yes.
Okay, Ricardo, who else?
Yep, I hope so.
All of you? Okay, I don't see you, so.
We haven't. No.
Yes, Guillermo, yes. Talking about yes, we have.
Perfect, cool, thank you. Cool, so business plan is useful. Usually investors ask you about that because they want to see how you think about the future and if you can think about the future of your industry and how you project the numbers into months and years. But this is not what we need now. What we need now is you need a model. We need a model to understand if what we're doing makes sense. So to validate our hypothesis, so we can test it this week, not in 6 months from now. And this is the model that most of the companies are using. We're not going to use this. It was invented some years ago. We believe that, I think it's a better use the lean canvas because startups actually operate in much more extreme uncertainty compared to incumbents or, let's say, recurrent businesses already in the market for a long time. And therefore, we're going to remove some aspects like the key activities, key resources, customer relationships, and we're going to focus on your problem, which is the key of what you're building, your solution, of course, not too much on that, and your unfair advantage and key metrics. Actually, I've added another part, and I saw that also team was doing this in H-Farm. So the key partners is very important, I believe, and I've split this into 2 boxes, into the solution part, so how your potential key partners can help you deliver your solution, and the second part of the key partners into the channel, who can help you to reach and distribute your product. Any questions so far?
Nope.
Good. So now we're going to go through each of them, and then we go to you, to you building this by yourself. So the first one is the customer segment. Here we need to be very specific. We don't want to know, generically speaking, who are your customers, but we want to be as specific as possible. For example, at Speed Legal, our customer segment is companies between 1 and 250 full-time employees. We're talking usually to the CFO or the CEO. They don't have a big legal team. They usually have one-person army or no legal team. They have at least 15 contracts to review per month. And ideally, they're spending 5, 10 plus K per month in outside counsel. So here we want to know who are your early adopters, who is your beachhead market. Financial institution is too broad, right? So name 5 people that can buy this quarter or this month from you. Second point, connected to the first one, is the problem. Here we don't want broad problems. We want to be very specific, and ideally you should step into your customer shoes and try to see, well, ideally you are also the person who has the pain, or the company who has the pain, because you started this company because you found a problem yourself. But if you don't have, just sometimes it's useful to close your eyes and really see yourself in the shoes of your customers, how they feel, what are the emotion, and their functional problems. So for us, it's legal. We know that our 3 problems we have. The one is time. Like a busy CFO or CEO, I don't have 3 hours in my day to go line by line through a contract, and so that actually it means that I can miss some opportunities. Sometimes I want to ask for help, but it's expensive, so money, $500 to $1,000 per contract review, and sometimes I sign it just because I don't have time. And that's even a bigger problem, right? So try to jot down your problems, 3 problems, and think about what are they doing today to solve their problems. These are some examples. I hope you can do better in this. But yeah, just to make you understand, like, for example, before Excel, people were doing probably Post-its and working on papers. And so that would be the alternative before building Excel or Google Sheets. In terms of problems, you can find 3 types of problems. The functional problem, again, the CFO who needs to sign the contract because otherwise they lose the deal. Emotional part, because I've been working on this for a long time. I cannot sleep at night because I really want to close it. I'm emotionally involved. And social, because the BOD or my investors want me to meet want the CFO to meet or the CEO to meet the quarterly objectives. So yeah, try to think about these problems of your specific customer base. And the next part is we should ask ourselves, would the customer actually pay for this? Because if they're not paying for this, if they will not pay for it, it's just a preference. And we cannot build a business on preferences. Am I going too fast?
Fine for me.
Oh, good.
I just had a question.
Yeah.
About the problems.
Sure.
If we really dig down, isn't this all like a resources problem in the sense of cost and or time?
Cost at all time, what do you mean?
Like in the sense that, okay, I would pay to solve this problem because having this problem costs me more than having to pay for the solution. Like in the end, if we drill down, all problems can be brought down to this cost. The real problem is always cost, right?
Yeah, but it can be also a thing of reputation. Could be, I don't want to be late in reviewing my contract because then I don't get a promotion as a general counsel or as an internal associate. I'm talking about my setup, my company, because I have experience, but you could do it at probably you automate the fund management with the blockchain, right?
Yes.
Yep. Okay. Yeah, but now I think we are also thinking a bit about the solution, right? So what's the benefit of solving the problem, which makes sense. It's connected. Each problem has a benefit if you have a solution for that problem.
Yeah.
And I think that you can be cheaper, you can be faster, and you can be overall better, right?
100%. But my point was more like, okay, if I want to be promoted, why do I want to be promoted? Because then I will make more money, right? Or why do I want a better reputation? Because then I will land more clients, or more clients will come to me.
Yeah, it could be a good perspective. Yeah, maybe you guys in the room, you have other examples, but I believe problems are not just about the financial aspect, but there are different sides and colors of the problem. And maybe you have experience with your own customer interviews in startups.
Mhm.
But for me, it's of course still legal. For example, yes, they want to save time and money, so it's a clear thing. But if you're not the founder, the CEO, or the CFO, sometimes it's really about having more time to spend with my family. Having more time.
Yeah.
And of course, time is money, and you can make always the calculation that you're saving. Partially, you're putting your time somewhere else. But yeah.
Yeah, also, I mean, they can all. We're business, so yes, everything comes down to cost in the business, but then the motivation of each type of cost that even helps to have it differentiated, as you put it, with this functional, social, and others.
So what's your point, Guillermo? You're saying that there are more than just financial aspects on your problems, or it's mostly financial as well?
For me, it's also financial, because in the end, it all translates into cost. I agree with Mark, but how you get to that and how you frame that problem from different reasonings, from different motivation.
Correct.
Yeah.
And maybe, I guess, Ricardo, you're more on the sales side of the company, right?
Yeah.
So you understand maybe a bit more what I'm saying when I mean about emotion, reputation.
Yeah. I mean, it's more about the framing when you want to sell it to someone else, right? So it's at the end of the day, is the cost of dollar value that you want to get out of it. But then, if you care more about free time, you just you're gonna be faster, more efficient. If you care about reputation, then you just frame it. You're gonna look cooler, even if it costs you more, and so on. So yeah, those are different ways to frame it, for sure.
Yeah.
I mean, I agree at the personal level that we want all of this, but in a business, as Guillermo said, I think business, because it's something external to us, then we can always reduce it down to numbers.
Yeah, true. But I think we are saying the same thing. So yes, I agree. At the same time, in order to get there, for a salesperson like Ricardo, like me, you need to understand the persona you're talking to. So once you define your ICP, your ideal customer profile, let's say you go after enterprise customers, right? So enterprise customer, you need to skip directly to the bottom here, where you have, so many people you need to talk to before making a deal, right? You have the user, the buyer, the decision maker, the influencer, the recommender, the IT compliance. So each of them has a job, a JD, a job description.
Yeah.
And of course, each of them has goals, aspirations. So that's what I'm talking about. But I think we are saying the same thing somehow. You need to understand the person you're talking to, the problem they have. Eventually, we can put everything into numbers, but there is more than that, in my opinion.
Yeah, maybe that's too much of an analytical take from my side, but 100%, I agree that on the personal side, there's much more.
It's a bit of an absolute affirmation, which I agree, as I said, but there is more than that.
Yeah. Thank you.
Yeah. Oh, good point. So I'll move on with the next one. Any more questions on this? Cool. The next one is the value proposition. So here is what probably you, Ricardo, were saying at the beginning. Like, this is the one sentence that makes you stand out and let people understand how you're different. So somehow it's similar to the business model that presented at the beginning. But yeah, so for example, at Speed Legal, we say Speed Legal helps CFO of tech startups or CEOs to save $1,000 per contract, $145,000 per year in contract review using AI. So you try to, again, name your customer, tell what you do, AI contract review, for example, in our case, and how you're different. Well, we put good numbers, which make sense, and people are actually very much enticed to know more. How can we save them time and so much money? What would be in your case, Ricardo? I mean, probably similar to what you said, but maybe you can try to
Yeah,
make
I can
it more numerical.
Yeah, in our case, we could say where we help a fund administrator. Here is the phrase could be either fund administrator or fund manager spend less time processing subscription, redemption, like accounting of their fund. So everything that is corporate action using blockchain technology, something like that. Yeah.
Yeah. And if I want to be more precise and ask you, how is blockchain better? I think blockchain is your how. Could you make it more enticing for me?
Yeah. We would go back to explain the how and just go one level deeper in the technology, but I don't think that's the.
Think about the impact for me as a fund manager. I don't think about your technology.
Yeah, well, you as a fund manager, you will not have to move the money manually. So receiving money or sending from one place to the other, and you will not have to report those transactions to your fund administrators. Everything is taken care executed and reconciled automatically.
If I can, maybe we can go one level of abstraction higher. You will gain time by performing less manual actions. You will save costs by removing manual errors, and you will save headaches and frustration, but by streamlining the interactions you have with your administrator.
Yeah, very good.
Reducing.
They're all good. The way I like it, and tell me what you think about this. We could say we help fund administrator who need to do the reconciliation, the payback, all the fund operations by saving them 50% of their time and 1/3 of their cost. At 1/3 of their usual cost. I don't know, something like that.
Yeah, yeah.
I don't have the
So
numbers, but
I'm
just trying to make it easy for someone who is like in the room to be interested in having a call with me or maybe talk more to me.
I think here maybe too shy in the sense not willing to bullshit enough in the sense that I don't think we are the only ones to say it depends. I think in every kind of business, it depends on how many transactions you have, how complex is your business, and so on. For certain, it could be used, I don't know, save 20%, and for others, you could say 200%. I don't know, like a different figures. But maybe to your point, we can just having our ideal profile and then make it for that ideal profile and then stick to that one. We say 50%. Well, for the clients, it's not 50%. Well, we just say it's 50% and that's it.
I know you're Swiss, Ricardo. No, kidding aside.
Yeah.
But kidding aside, maybe I'm a bit more American in my influence of starting the company. So yes, you want to be bold, but I agree with you. You can always say, I was talking about my ICP, my persona. Or you can say on average, and then the average means everything and nothing. So I agree with you. You choose your poison. Cool. Someone else want to try, or maybe Guillermo, Callum?
Yeah, sure. So I guess our value proposition is to deliver sophisticated energy and sustainability technology to the consultants to avoid them having to invest heavily into an internal development team.
Okay. So I got a bit lost, maybe because I don't know the sector very well, but so the consultant have a development team who need to build the system or what you have?
No, they don't. So there's plenty of energy consultancy firms across Europe who rely quite heavily on kind of Excel spreadsheets and very manual processes. We effectively provide the technology for them to white label to avoid them having to pay, I don't know, several £100,000 in salaries for kind of tech guys, and then roll out that solution under their own brand to their clients. So that's the distribution model effectively.
But they have a tech team building stuff for them, right?
No, they're energy experts. So they get like the hardwares, the meters, but they don't have a development team. They're not kind of technical in terms of building software.
Okay, cool. So they do it manually right now with spreadsheets and Google Sheets.
Yes, yeah.
Cool. Can you try again? Can you say it again, please? I mean, the one sentence.
Oh yeah, sure. So we provide sophisticated technology to energy consultancy firms to provide to their clients to avoid them having to hire an internal development team to create the software themselves.
I see. But is this what they're doing right now? You're saying to avoid to hire. Are they actually doing this?
Not our ICP. That's the reason we step in. So we identify the fact they're still heavily reliant on these manual process and say we have tech that could do this job 100 times more efficiently, scale much quicker, and it's kind of a no-brainer for them.
Yeah, cool. Thank you. Makes sense. Very good. Guillermo?
Guillermo, you are muted. You're talking about.
Thank you. Can you hear me now?
Yeah.
Yes.
Better. So we help banks who want to issue digital securities by providing them a single API access to all of them. So they don't have to choose in a highly fragmented landscape of options.
Nice. I think I understood very good. I mean, I understood it clearly. Another thing that you can do here, guys, so good job, Guillermo, is doing like a high-level comparison, like a tagline, like what's the name of your company? Startup again, Guillermo?
Tokenway.
So Tokenway is played for digital assets. I'm not sure if it's correct, but you can give them the high level, like Played is an API service that you connect with banks, right? And you can pull stuff from banks. So you could be like the Played for something else.
Can you repeat that? What do you mean? Maybe it's a language thing. Play? You mean Played?
No, wait. Let me share my screen here.
Played, the financial company that is also like API.
You know this one? I mean, I was using this a couple of years ago. I think it's still live.
Oh yeah, of course. Yeah, yes. Yeah.
So I was saying you're like Played, but for something.
Okay.
I mean, it may be wrong, but I'm just saying, like, you guys can, all of you can do this. Like,
yeah, exactly.
A stupid example is YouTube is Flickr for videos, right? It used to be Flickr for videos, or I don't know, Instagram is Facebook for pictures or whatever. And each of you can do this so people understand, like Speed Legal is Uber for contract negotiations or something like that, you know? It helps people that are not in your sector. Like me, I could be in the energy or in other sectors or whatever, to make it clear and like, aha, I got it. I don't feel stupid.
Yeah.
Okay. Cool. Good job, guys, on the value prop. Yeah, so we were talking about this, Mark, before. You can pick at least one of them. The more, the better. So you're cheaper, you're faster, you're better. And ideally, each of these, and ideally you can connect these to them, also to your problems, like how you benefit them. Like you can go, so the problem was time. Well, we help you go 3x faster. You don't have money to pay for a lawyer. Well, we are 30% of the cost, 25% or something like that.
And how do you differentiate that from the business model that we did at the start?
You mean this sentence?
Yes.
Yeah, so in my business model, I was expecting something like more numerical. Like usually I also when I pitch Speed Legal, it's like my business model is like we have a freemium B2B SaaS model. We target CFOs. We have an AI contract review platform, and we have 10K MRR. You know, something like this. I tend to put more numerical stuff because investors like it, and because again, business model is about the business, not just about your product or your solution or your service. So that's how I make it compared to the value prop. The value prop is, for me, is Speed Legal helps you save 1/3, 2/3 of your time. So it takes 1/3 of the time and 20% of the legal cost of a normal lawyer. So that's my value prop, and therefore it gives you more time and more space with your family, and you can sleep more relaxed nights without, you know, stuff like that.
Okay. No, okay, but I understand the difference, and so
yeah, probably I should have specified a bit better in the first when I asked you the business model at the beginning. But yeah, that's how I see it.
Yeah. No, it makes sense. I think it's just a question of wording, and anyway, they are quite similar. But thank you for clarifying.
No, thank you for asking. Cool. Let's go forward. Let's go on. The solution part is actually where all of us want to talk a lot, but we should. I mean, that's why they put actually half of a box, because otherwise we would be put a lot of things. But our solution, we are all in love with our babies, but we should put like few things also, because at this stage, I know that you're making revenue, some of you, I mean, most of you are according to the slides, but we are talking still about MVPs usually, right? So MVP is the minimum set of features that help you prove that you're building something scalable worth investing more time and money. So 3 features for us are, again, these are matched to the problem ideally. So how do you save time? We have the red flag table, which is the risk analysis part. How do you save money? Again, the same part, the red flag table. And how we help with knowledge about your contract. We have the contract summary called contract nutrition label. And you may have your own features for each of the problems that you're targeting. And let's see about solution. Yeah, so questions about this?
Clear on me.
Okay. So one thing I want to add about solution, about your product or service, about your MVP, is, think about the key partners. So who are the key partners who can help you build and deliver your product faster? For us, for example, are law firms and investors, because once we onboard an investor or a law firm, we get a lot of contracts, and that's gold for us, because that's data we can use to fine-tune, label, and so forth. So who could be your key partners in order to improve your product or better deliver your product? I see some of you are in the Prague Stock Exchange. Sorry?
Yeah, we are Tokenway.
Tokenway. So could that be considered or not a key partner in your product?
Yes, definitely. And they are one, and there are other similar ones like Latvia Stock Exchange and others that are coming. So each of them are a key partner for us.
Cool. Yep. All right, let's go on. Channels. So this is how your customer find you. And an easy story to understand. There is a small village. There is a market every Sunday. There is an apple farmer. Guess what? If they go on Thursday, how much do they sell? Not much. What if they sell not in the central area, but they go where the market is not, in another alley? No. So we want to sell where and how people want to buy. So where they buy and how they buy. So for us, we found out, well, there is not like a magic formula. It's trial and error, I guess. There is a nice book called Traction, where you can, well, they show you all the 20 channels and you test each of them. For us, outreach is good, like LinkedIn, cold emails, but also SEO and content marketing. Like people search for NDA contract review and so forth on Google. And it's also pretty good here to create a story. Let's say, think about Alice. She's the CFO of a company who just raised a Series B. She's very busy because they're ramping up very fast. They still don't have an internal legal team or legal hire, and she's struggling with contracts. She was randomly on LinkedIn and she saw a post about Speed Legal, about contract review, an NDA contract review. She really liked the topic and the blog. That she went on the website, she clicked on the website, and she saw that actually is a freemium service. She uploaded a contract for free. She really liked the service. She sent a link to the CEO, and they bought a subscription. So, as you know, stories are much easier to convey than a matrix, like a table. Matrices are great for coding, for data injection, whatever, or also for learning maybe. But again, we're talking about emotion. We are people. People like stories. They follow the story. So try to make a story for each customer segment you have. Ideally, if you have more than one. So it makes it easier also to explain to investors or to whoever you have to convince about your company. Questions?
Maybe just there is some overlap between, or at least in my head, for the key partners between channels and the one before, which was
Mark? Is Mark? No, who's talking?
No, it's Ricardo from Fume.
Sorry, Ricardo. Yeah, good
so
question.
the previous one was what was the previous slide? So
Yeah,
channels, solution.
Let me
Yeah,
tell you.
because like in our case, just to tell you where I'm going is like we have a platform that is a B2B2B, like we integrate within the fund administrators, but then they sell it down to their clients, the fund managers. In our case, well, the fund admin are our distribution channel. They are our partners. They give us access to the fund manager at the end of the day. So they help us distribute, but we still need to approach the fund administrators to get in there. So it's both channel and our key partners.
So in that case, I would say, well, I see actually them more as, so fund admins, I see them more as a channel partner more than a solution partner. I mean, in my experience, so in my opinion, a solution partner is someone who can help you really improve your product or actually build it. So building, thinking about, really help you with us. It's with data. For you, could be a key partner, could be an L1 or L2. I'm not sure which blockchain you use.
Infrastructure provider, yeah.
Correct. Something like that. For
A
us,
stablecoin issuer.
Yes. Like for Guillermo, the stock exchange. Well, does the stock exchange help you? I'm not sure. Tell me more about the stock exchange. How do you interact with them?
Well, actually, like the stock exchanges, like to make it simple to understand, but there are these new digital stock exchanges called DLTs by the EU. So there's like digital exchanges, and there's one in Prague, one in Lithuania, two in Germany, etc. Each of these are partners because they have all those securities inside. So by connecting to them, we connect to each of that volume that they already have inside. So we need to connect to them. This is why the key solution partner. But I agree with Ricardo. Like for the channels, key partners, maybe could be our clients themselves, because we don't need 200 clients. We don't need 500, 1,000 clients. If we score 3-5 banks, I think they're all going to how to say that, refer themselves, because the more there are, the more liquidity they also have. So it's like a good for them. So could our client be a channel key partner?
Could be, right? Oh no, sorry. You're asking me if your client can be a referral for the others and therefore a key partner?
Yes.
Yeah, could be. I mean, what's the definition? And then we'll go to you, Callum. But what's the definition of key partner? I didn't find such a definition. In my opinion, a key, because as we can see here, there are different channels, right?
Yeah. Well, actually. Associations and
I thought there was a slide here, but anyways, you can have content SEO, referral marketing, so-called marketing referral. but yeah, so that's a channel. How can that be a key partner? Yes, in my opinion, it could be also a key partner. There's not a strict definition.
Yeah.
But I would say a key partner is someone who is like a 10x a normal referral user within your channels.
Okay.
Let's say if one of let's say if one of our users invites another user, they get a month for free, right? Or a contract for free to review. But for us, the key partner is actually the accelerator, like H-Farm, or VC firms, or co-working spaces, or neobanks, like online banks, because we are a perk for them. They look cool. They give for the customer free contract reviews. They save money. Their customers, they're happy. They may be more successful because they invested in you, the accelerator, and we also get more customers. So that's a key partner. It's the impact is much bigger, in my opinion. Yeah. Callum, what do you think about your key partners?
Yeah,
Either solution or distribution, both.
Yeah. I mean, on a similar note, our kind of clients we actually refer to as partners because our model is so we white label the product, they distribute. There's then usage-based billing. So for every meter, so like smart meter in the commercial premise that they monitor, we then charge a fee for. So in some sense, the word is a distribution partner. But I guess, yeah, more traditional, conventional forms of partner would be the hardware companies, so the production manufacturers of the actual meters at the premise. We've got kind of a few kind of initial relationships which seem to be working quite well. We endorse their hardware, they endorse the software, and they make kind of quite kind of natural introductions through that kind of way of working.
Cool. So are you the software for that hardware, or you're more than that?
So we configure our software to be compatible with any hardware. It's already compatible with most like kind of mainstream metering companies like Siemens, AccuEnergy, but we can then make changes to the software to configure, to any meters or sensor.
Cool. So just to make sure I understood your kind of customer journey, so you also have a B2B2B, or is it just a B2B?
Both, predominantly B2B2B. We do work with the end clients, but most of our business is B2B2B.
So your consultants are the end of the B, or who is in the middle?
The consultants are in the middle, so they're the ones prior to the actual end user, which is the business, so the factory, the airport, the university.
I see now. Okay, very interesting. And you kind of provide something like a Bloomberg for ESG, like data dashboards for ESG.
In some sense, it's predominantly energy focused. So reading all of the energy consumption data across a very large premise, and then helping the energy consultancy company who looks after that premise to visualize, produce reports, produce ESG data, sustainability data on behalf of the end user, which is the final B.
So you actually have a Bloomberg for zero emission kind of thing for consultants. So you have two taglines, one for them and then one for the the company, maybe. So what would be the tagline for the company installing the hardware?
So that would be a partner. The companies that do the hardware is more of a partner.
No, sorry, the company who's actually buying your software and the hardware to measure the consumption, the final user, the final B.
Oh yeah, the final user. Yeah, so it's kind of track every meter across your premise and visualize your entire energy consumption and then produce reports. So it's the end result effectively.
Oh, question: Why do they need to do it? Is it because of regulation imposing that, or what?
Yeah, I mean, if you're spending kind of several million euros on energy consumption a month, you want to know exactly where that expenditure is going and optimize, save costs, reduce emissions.
Okay. Yeah, so it's a safe costing opportunity as well.
Yeah, pretty much. Yeah.
Cool. Thank you, Callum. Very good. Cool. I go forward. So key partners are companies, people, association who help you distribute your product in a one-to-one kind of relationship. So 6, we have the revenue streams. Basically, it's how you make money. For us, is B2B SaaS freemium model. For you can be another one. Could be licensing, could be transaction fee on the AUM, or subscription fee, I guess, for eucalyptus. No, sorry. How do you say it?
Yeah, so eucalyptus.
It's like the plant, right?
That's correct. Yeah, it's a spin-off. So eucalyptus, and then eco, like environmental sustainability.
Cool. Yeah, cool. Nice. I got it now. Eucalyptus. Okay. But yeah, so the question for you guys that are already making some money probably is, will it scale when you're going to have 100 or 1,000 customers, right? So that's a question that a good CEO would ask themselves and try to answer, will this pricing work even on a larger scale? And these are some of the revenue models that we see around. But again, the one in red are the ones that I think are more relevant to you guys. Maybe referral, the one that you were talking about, Guillermo.
I think we see the 6 revenue streams. Okay, now we see it here.
Okay, let me reshare my screen.
I think we were just late by one slide.
Okay, cool. Did you see where did you get where was the last time you saw?
We only saw this one for a few seconds. Revenue, the 6th one.
Okay, cool. Okay, cool. Here.
And then now we see it. Revenue models to consider.
Perfect. Yeah. So the one in red is the one that I think are probably more relevant for you, but maybe not. You mentioned, Callum, that you have a pay-per-use, right, as well.
Yeah, that's correct. Yeah.
And there are more than these. These are just some ideas, of course. The referral is the one that Guillermo was mentioning as well. And I guess you have a similar program also. You Fume.
Yeah.
FUME. Fume. Okay.
Yeah.
Cool.
This is probably the part where we hear the most not to think about this part here, right? How to scale this one, especially if you're focused on the 0 to 1. Like, don't focus on how to scale it. Once you have recurring, you're really solving a problem and prove it in there, then it's something that comes after.
I agree.
I'm not sure for the others, but
yeah, I mean, if you're still 0 to 1, I agree with you. You don't need to overthink it. It's good to have, as I mentioned before, a mindset. So again, when you raise big checks by big investors, like even tier 1 VCs in the US, they want to know how you think long term, and it has to be big. It has to be whatever you want, but it has to be a massive transformative purpose. It has to be like having people jump, right? But yeah, so if you are 0 to 1, I agree with you. You don't need to go too deep. But yeah, I thought some of you were maybe across further down the path. So in that case, yeah, think how does it scale? If not, keep it as a backup question for your fundraising, maybe. Did you want to say something, someone?
No.
Just my dogs are barking. So
no, thanks. But good point, Ricardo. Yeah, very good point. So maybe you do this already. I find it very useful, these questions. Like, as you're doing customer interviews, probably, you're still figuring out what's the best pricing. This helps you to understand what's too cheap that they don't consider buying, what's actually too expensive that it's actually, they don't buy. I mean, too cheap because the quality is, they think is too low to actually, even consider. And then there is the threshold that they feel uncomfortable, but they still buy it, which is the getting expensive one, and the bargain, which is a good price. So you can also have a premium tier or whatever. And when you ask this question, then always follow up with a question like why, because it gives you a lot of color, and we need color at the beginning of our startups.
Mm-hmm.
Cost structure. These are pretty straightforward, like fixed cost, variable cost. It can be compute power if it's variable, if it's not scaling with the product, with the outcome, maybe so it's a fixed. So labor and so forth, maybe office, and think about the CAC, the CAC, the customer acquisition cost, basically taking all the marketing and sales expenditures for that period of time and dividing by the number of customers you got. And the LTV, so the long time value. I have some formulas if you want, I can share with you after this. But yeah, useful to show, useful to know. Again, I think it's a bit an overkill, in my opinion, if you're at 0 to 1. But it's more of a mindset exercise to be ready.
I would say for most SaaS, it's pretty much only customer acquisition, right? Like, okay, there is some maintenance for the software and so on, but assuming that you can have a version developed and ready to be sold, then it's not that you pay. I mean, at least in our case, we don't pay for servers or a lot of computational costs. But okay, in your case with Speak Legal, you might be paying in tokens, so then you have it. For most SaaS, it's pretty straightforward, only customer acquisition cost.
Well, you're saying that most of the costs are marketing and sales for SaaS.
Yeah.
It depends, but yeah, it depends, really depends, because some SaaS companies are really more infrastructure driven than others. Think about OpenAI; it's a SaaS company, but their balance sheet is not just about customer acquisition. It's about, actually that's very low because it's word of mouth. So it depends, I think.
Yeah.
And also about, I want to be clear, like customer acquisition cost is not a line in your balance sheet or income statement, but it's a definition. So it's actually a number that you need to calculate and show to your investors, because then they want to see this number like CAC, or well, the CAC payback period, or the CAC over the LTV. So they want to see basically, let's say we have a LTV long-term value of $10,000, which means on average our customer in their life cycle spend $10,000, because then they churn or because they stop using the product or whatever. How much does it cost to get them? That's our CAC. So that's the number, again, investors want to see, but also you want to see, and it should be lower than 10K. If it's ideally 1/3 of 10K, it's a good business. I mean, it's good margins and healthy margins, and people are going to put a lot of money on you, throw money, so you can just put money and get more money. So that's just to be sure that we are on the same line. CAC is not like a marketing sales kind of line in the income statement, but it's a ratio, that's an index that you calculate by adding all the efforts to take new customers in a given period of time. Usually you do month by month or quarter by quarter, and you divide by the number of customers that converted into paying. And that's the CAC.
Okay.
Cool. And again, I have Google Sheets on this and stuff I can help you if you need later, but it's not the purpose of today. So moving on 8, we go to the key metrics, which is your North Star. We call it also North Star because it's that metric that you should be focusing on and should be the one that makes your business successful or not. Remember, we are what we measure, because if we measure the wrong things, we may become what we don't want. So choose wisely. And these are some vanity metrics that you already know probably, like visits, signups, generally speaking. For us, a better measure is number of contracts reviewed per period of time by user. So we differentiate by heavy user and not heavy users. And then, of course, retention. How many times do they come back in a given period, being that a quarter or 6 months or a year?
Sorry, Hans, I meant to ask, this was more relevant to the previous slide, but in terms of customer acquisition cost, if there's no spend-based marketing, which you can directly attribute to the acquisition funnel, I mean, how do you approach it?
It's a good question. I believe it's going to go to 0, which is great.
Okay. So you don't calculate like kind of operational cost or like the cost of the team or?
No, I mean, of course, yes, the team. Yeah. So there are two types of CAC. There is the lean CAC and the full CAC. The full CAC takes into account the the labor, and the non-full CAC take into account just the direct spend without the labor. But investors usually want to see the full CAC because they know that if you have like 10 people selling, cold calling, or whatever, it's a cost, right? So
makes sense.
So how I calculated this? Well, this is the LTV, which there are more ways of doing that, and I did an average of different methods. And there is a good blog post for this. I can send it to you later. And then I calculated the CAC here by adding the total cost of marketing expenses and divided by the numbers of users that we plan to target. Again, this is a business plan, which is something that we're not doing today or teaching, but something that, again, investors may want to see as, especially old study investors, but sometimes, even other investors. But I think it's not relevant for us at the beginning of our startup. So let's move forward on this. Cool. Any questions on the metrics? Maybe let's ask, what's your North Star?
Yeah.
Want to go first?
I think that for us, the most, we're still not sure about the North Star because as always, it depends. It could be the total asset under administration. That could be one. But depending on the model that we have per fund, we might have a fixed pricing. So it could also be the amount of funds deployed. So number of funds or total asset under administration. If you had to pick one, probably it's funds deployed, and this is the one that we're currently using.
Probably yes, because it encompasses both of them.
Yeah.
Cool. Funny, we have exactly the same, because we also get a transaction fee. So the more volume we would process, the more revenue we make. But we also, it's per bank, per license. So it's exactly the same situation.
Right.
There's both number of banks and volume.
Sorry,
Yeah.
and your AUM is because you're actually managing their money? Or
No, exactly. But we might get a percentage on the total asset under
No,
administration.
I'm talking about Guillermo, sorry. What's
Sorry.
I don't remember your solution. Is involving like managing or getting a cut of the AUM?
So if a bank wants to start selling digital bonds that are stored in one digital repository,
Okay.
we made a small transaction fee of that. So if a bank ends up doing 1 billion euro in volume, and we have 10 banks, so we have 10 billion in volume, that could be our North Star, yes.
Cool. Yeah. So you digitalize their assets and you help them.
And the distribution. So every time they sell a bond, we take a small fee from that.
So you are kind of the layer between the bank and the buyer, would you say?
Then between the banks and the DLTs. The DLT is this thing, is a EU digital security deposit.
Cool. Is that different from DEX? DEXs?
Yes.
Decentralized exchange? Okay.
Yeah, it's very different because these are like security. All that is MiCA. This is MiFID, means each security depository has their own license and their own set of bonds and shares inside, like closed, fenced. They have to be closed, even if it's blockchain. They have to be private or permissioned domains.
I see.
And banks connect to each of them. So we are the interoperability layer connecting banks with DLTs.
So there is no decentralization here, actually.
Yeah, that it's somehow decentralized. They call it hybrid finance. But banks or in financial regulated environments, they have to know seller and buyer, and securities are always stored and tracked.
Cool. Thank you, Guillermo. Callum?
Yeah, pretty boring one, but I'd probably just say monthly recurring revenue at the moment. We know the costs are quite stable and they're probably not going to change too much. So through MRR gives us a decent sense of where we're heading.
MRR is the outcome though, right?
Is what
Yeah.
the
outcome. like MRR is at the end of the day how much money you make, but like the metrics in order to increase your MRR, that's what's interesting.
So what would be your metric again, Callum? You said the MRR or the MRR growth?
Yeah, monthly recurring revenue.
Cool.
I guess you could look at it as growth month on month, but I mean, yeah, for me that as a North Star is kind of like the.
Yeah, I mean that's the North Star for most of startups, I guess. Ideally, it's specific to your business, but it doesn't have. I mean, yeah. But anyways, maybe for you again, it could be something that comes before the MRR, which is number of deployed or installed devices or new operators, new companies who subscribe to your platform, to your system, to your ecosystem. Yeah, could be good. Good. I would say last but not least, unfair advantage, which is something that makes you different, not from in the eyes of your customer, but in the eyes of your competitors. So this is different from the unique value proposition because it's focused on the competition, not on the customer. So how are you different compared to other people in your market or potential entrants? It's very difficult. I mean, it's very difficult. It can be difficult at the beginning because, again, you are maybe just starting out and it's not clear. It's okay if it's blank. But yeah, these are some ideas. I mean, for us, for example, is the number of label contracts that we have, which again makes our model, well, not our model, but the RAG or the things we do on top of the LLMs a bit more fine-tuned or fine-grained than models. For you guys could be, counter positioning, for example, for the fund management part, like in order to enter your market, fund managers, they need to cannibalize their sales, right? So because they need to fire the people doing the manual work and they need to start hiring maybe tech people like you and build a new business. The same for hotels and Airbnb. For a big hotel to become Airbnb, they need to start losing some sales before actually becoming profitable and competing with Airbnb. So that's one of the advantage, one of your moats. Other ideas here in the room? What are your moats?
Could be speed to market, being the first ones, because right now there are no real exact competitors. So once we will be first, we will trap liquidity inside, there will be volume, so there will be no reason to move for a bank that already is working with us.
I would say yes, but actually, usually people say no, it's not. Also, the literature says that it's not, as well as team. So we can agree, not agree on this. I kind of agree with you, but if you think about Anthropic now being like better than OpenAI and was not the first mover, like there are, I mean, just an example, but so this it's not competitive long term. The first mover advantage, as you know, also because the first mover is the one who gets the arrow sometimes, right? So try again. What else could be? Because investors don't buy it. Like, okay, you're the first mover, but then tomorrow I'm gonna give 20 million to the smartest guy down the street, and it's gonna make the same thing you do, something like that. So what's your moat?
Yeah, no, definitely later should be like technical. How to say it? Like technically, it's the easiest to connect, and is the product with more easier to use and more value for the banks. Like starting with speed, of course, because the first, but then if you're just fully agree, then you're nothing. Then you should be then technically the easiest to connect and the most technically valuable.
Yeah, maybe Guillermo.
Go on.
Sorry, I just wanted to comment because he might have a similar one that is ours. It's like an early integration, in our case with fund administrators, in your case would be with banks, and the operational data locking the fact that you are not just the first one to start, because if someone starts later, well, like if Anthropic is just as good or if not better than OpenAI, they can just pass forward. Whereas in our case, we have a very tight lock-in and deployment. Like if a bank's already using us, it's not going to switch in there, and then it makes more sense to stick with the same system because it opens other doors. Like in our case, it's the same with fund administrators. So it's more this data lock-in.
I didn't understand everything you said, Ricardo, but I think I understood the fact that you can lock them in, and I agree, that's a good strategy. So let me give you some example ideas here. So counter positioning is one, like you make something that it's very like Kodak and the digital pictures, like they could see coming, but they didn't want to cannibalize their sales, they died. Blockbuster and Netflix, same example. Corner resources is like building like a patent kind of mode, patent IP, whatever you have. Scale economics, of course, like the more production, the more output, the lower the unit cost. So it's more difficult for you to enter, let's say, the cloud compute or the data storage market, for example. Network effect, the classic example is Facebook. The more people on the network, the more value for the user. So if you start a new social network today, it's more difficult because people at the beginning don't find any value in joining your network. Switching costs, as probably you guys mentioned just briefly now, is when, or for example, moving from one blockchain to the others. I have my wallet, my MetaMask, whatever. I need to move to another one. I need to switch a lot of services and stuff. But for example, also the Mac, iPhone example is a good switching cost example. Branding and process power are a bit more difficult for us now because they're more focused later down on the development. We build our brand, maybe they stick with us. And the process power is making the process so good that even if you give it away, they don't do it because there is some tacit knowledge that is difficult and cultural stuff that is difficult to replicate.
I have a question, Hans Paul. Sorry to interrupt. In that slide, one more that I see the network effect. Like for the mode that we were discussing, I've always heard. I don't know, guys, if you heard the same or if you agree or not. That is like VCs are highly allergic to hearing network effect, like because they see like, okay, there are so many things that need to be in place before you actually start making money. So it's something that I stopped using, the network effect, because because of VCs are allergic.
Probably, yes, I agree. This is a theoretic framework that I found, Hamilton-Helmers, and I think it makes sense to me to explain this concept to you guys and makes you come up with new ideas. But I agree with you. It needs to make sense. Well, when Snap pitched and Instagram pitched, that was their pitch at the beginning, probably. I'm not saying there are many companies who can actually show that mode, but the few who can, then, I mean, of course, it doesn't apply to all of us. Like, it doesn't apply to me. I could take it to an extreme and also apply to Speed Legal because the more users, the better the models because we have more data. So every company can apply that, I guess. But I agree with you, Guillermo. Probably is not something you want to put
in the beginning while we are not big.
Yeah, I agree with you. This slide is not my slide, so I
was questioning you. Just like really was told like, hey, they hate it. Never use it.
Good to know. Thank you for that. But I would, depends on the company you're in. You can be earlier on if you are depending just on that because you're a social network. So it's actually probably quite on the point, this slide. If you are a social network, you need...
Yeah, sure. Actually, yes. Then that case, yes.
You need very soon. Otherwise, probably it's just coffee talks, but not real business. But yeah, it depends on the business you're in. Cool. No questions on this so far? I mean, additional questions?
Nope.
Cool. Now it's your turn, guys. I'm not sure how much time we have. They told me 1 hour and a half. But basically, what I want to say now is every box that we saw is an hypothesis, right? And now we need to test it and make sure that they are being validated. So the initial idea was to give you 15 minutes. You fill out the canvas. If you have done already, perfect, so we can skip it or keep it like to 3-5 minutes to finish it. Then find the risk assumption, which means what's the box that you think is the most relevant for you in order for the business to be alive. So if one of them falls, everything falls. or maybe 2, but let's say what are the riskiest ones. And then you have some time to share with the group. If not today, I guess there is one-on-ones with me, and also you have a check-in this Friday probably, or I mean, Allegra knows, but yeah, so I would say, guys, spend some time. We have probably 20 minutes each, and to fill out. Do you have the? Well, you don't have to make it fancy. Just I'm gonna put the slides here. Just do it on a Google Doc on your notes. It doesn't have to be like the same. I can say to you, I mean, the link, but you can just put it on a Google Sheet, right, or a Google Doc, and go one by one.
Yeah. Okay. So is this link? Okay.
Let me put you the number so you already know. Well, you can follow your. So the most important one are 1, 2, 3. Well, yes, 1, 2, 3, 4, and then after you have customer problem solution, you can decide which one to fill. It doesn't need to be like my order. I mean, the order that also in the books they speak about. Yeah.
Yeah.
Cool. I'm gonna mute myself and then let you work a bit.
Und
If you're starting with the customers, really think about who are they. Try not to write fund admins or energy consultants. Just try to be specific. Try to be, who are the 5 companies you already buying from, they're buying from you, or try to be as specific as possible. If you can add some psychodemographics, such as what they like to do, even in their free times, like free time behavioral. So not just age demographic, but also behavioral. Like they use Twitter a lot. This one persona is always up to the latest technology, or the one more, depending on who you're selling to, of course, but try to be specific. If you have any questions, of course, I'm here. Maybe maybe 3, 4 minutes, couple of more minutes. For you guys.
I think I'm done.
Cool. Yeah, let's wait for the others.
Yeah, I think I'm done too.
Cool. All of you? Who's missing?
yeah, okay. It's also for us. Yes, we are on the other.
Sorry, Ricardo, are you done, or you need a couple of more seconds?
No, we're done. We're just discussing back and forth, but yeah, we can go over it together. Yeah.
Cool. Perfect. Then, glad to hear you're done, guys. Now, let's start with the, let's say, column. Choose, let's say, the 1 or 2 of the riskiest ones that you wanna, you wanna talk about, and we'll go from there.
Sorry, Hans, do you mean choose any options, any 2 headings?
Any 2 of the, I mean, I would say the 2 boxes that you think are the less validated, you have the less data, and that are actually the most relevant for your business right now.
Yeah, I'd say the first one's probably unfair advantage. So we would suggest that our unfair advantage is 1, domain knowledge. So having knowledge of both the hardware and the software side. And the second one, I guess, is the network of our CEO, who previously exited a similar company. We're looking to leverage that network. So in terms of the software, it's not entirely differentiated yet. So we would kind of rely on those 2 factors as our unfair advantage, but we haven't validated them yet. Some very early signs of the latter, perhaps the network side, but not the former. So that's one of them. I think that the channels, in terms of partners, we have kind of ideas of who those channel partners might be. Like I said, the kind of metering and the hardware companies, but also perhaps energy sustainability certifications or standards bodies. We haven't yet, again, validated those channel partners yet.
Cool. Well, unfair advantage is relevant. I mean, to know now, I would say it's great to have it, but if you're validated all the rest, it's a good problem to have. So if you're sure that you have a strong problem, the customer segment is clear, revenue model is also pretty much solid, you're in a good place if that's one of the riskiest boxes you have, in my opinion. And so what channels do you currently have?
So at the moment, it's just been direct to customer. So we have a handful of early adopters.
Connections of your CEO?
Yeah. So we've hooked up with 4 different companies at the moment. Direct connections of the CEO.
And what's the ACV, the average contract value or annual contract value?
Minimum's probably 10,000 euros, max at the moment I think 30,000 euros, 35,000.
And it's per use, you said?
Yeah.
Cool. Yeah, so as a homework, I'm already anticipating the homework because then we're going to move to the other teams, but is think about how to validate one of them or both of them, if you manage, by the next checkpoint. So design the cheapest experiment to test your risk assumption this week. So in case of validating the unfair advantage, which is the network of your CEO, it could be well, actually, but you already validated part of it because you already closed some of the customers, right?
Yeah, early signs of validating it.
Yeah, so you can do more validation on that and see if they convert, reach out. What other points you want to validate this week?
So there's that one, and I think potentially the cost structure. We think it works, but we don't know if the customer would agree with it. So there's basically a base SaaS fee for the platform, and then, like I said, it's usage-based billing. I think this was the previous model of our CEO. We don't know if the market's changed and what competitors are doing in this space. They might have changed their model. I think we need to perhaps do some research to see what's working with other industry players, to get a sense of what the expectations might be. So that's probably something we'll look at this week.
Good. So it's cost structure, you said, over the others?
Yeah.
Cool. Then write it down in the WhatsApp group that you have, I guess, with Zeno or Allegra. And so we have it there. And cool. By the way, have you heard of the company called Illuminem? I think it's based in Paris and London.
I haven't known.
Well, they're Illuminem. I know the founder in case, but probably their ESG kind of Bloomberg platform, but probably it's different from what you're doing. You're more into, that's different. Yeah, you're more into the energy consumption of the building. So
yes,
in case you find it that's relevant, I'm happy to make any connections.
Thank you.
Thank you so much, Callum.
Thank you.
Of course. Who wants to go next?
You guys go if you want.
Okay. Alrighty. So on our side, we have 2. The problem risk, I would say on our side. So the fact that we have this painful manual fund administration and the willingness for fund manager to pay for it, something that, it's tricky to find in what range probably the fund manager are willing to pay for that. We got some fund managers that have a lot of operations, a lot of the manual subscription redemption, paying distributions, constantly yield to their investors on chain. So spending a lot of time, but maybe they manage, 150, 300, $500 million or so in there. And for them, it was like, okay, but how much are you spending in fund administration? And they tell you, 100, 200,000 per year. It's not a problem. Like if we need to do more, well, we just spend more in our fund administrator. Why would I take any risk to go and test something new on chain to automate this part in there? Some people are like, okay, if I need more people in there, well, I'll just buy. It's because I have more investor, more operation, and I'm willing to pay more for the people. So maybe validating that part that I'm willing to use a software to automate this part rather than just throwing more people at it.
Sorry to interrupt you. That's a very good point, Ricardo. So, because remind me this part. So the management fee, 20%, right? Usually, you said 21, but is it 20?
So management fee is 2%, and then performance fee usually they say 20%.
So yeah,
And this is what they.
Carry is 20
Yeah.
and the management is 2. So you're cutting the 2?
So it's management and performance is beside. Like usually the fund manager uses management fee to cover some of their operation or the people working in there. It really depends, or maybe even if they have very low cost, they just charge it. But on top of that, on top of the management performance, the investment fund pays a fund administrator to perform certain tasks.
Yes, yes. So this is on their, yeah, okay.
This could be either a flat fees, they just pay fixed 50K or 150K or so per year, or it could be variable depending on how much they have transactions and so on to go over it. Yeah.
So actually it makes sense because it's in their income statement is an expense, is a cost for the fund manager because they get 2%, right? Plus 20 if they're successful, but let's say they get 2%. And then they're spending 20% of that 2% into, well, not 20% of it, but they get to spend 20% into the fund admin, right?
Yeah. Yeah. So in my opinion, yes, it gets it makes sense. But
sorry,
often like a few times.
20%, sorry to interrupt you, of what?
So the carry is calculated on 20% of the performance that the fund generates. So if you have 1 million, it becomes 1.2 million. You take 20% of this.
About the fund admin cost that you're cutting with the blockchain, with the stablecoin. What were 20% of what?
It's not 20%. Like.
Okay. I saw 20% in the slides, maybe, or my bad, or 21. I don't know.
So 30.
Or maybe no. Sorry, my bad. Okay, so you're saving them a lot of money, but it's not a number yet. Okay, it's not a number.
This is the tricky part. Some people, they might have few amount of transaction and they just say, well, I mean, I just do it manually and that's it. And, for me, it's a problem of 5,000 or 20,000 per year, but it might be a small cost compared to the rest of the operation because they're a large fund.
Do you know allocations.com?
Yes. Yeah. Yeah, we know them. Yeah.
Allo allocation. I know the founder Kingsley, but you know, of course, AngelList and so forth. So you're basically a faster and cheaper version of them.
Yes, so allocation and so on is mostly for private equity, SPVs, and so on, vehicle to invest in like private equity, real estate and whatnot. Whereas for us, it's more for open-ended liquid funds, so hedge fund kind of structure. And it's not only the software to keep track of the transaction, but it's actually a smart contract that execute the transaction. Like allocation and all the others, they just have to use banks to pay back the investor, to pay themselves the fees, and then they go to the admin, like allocation.com, to actually reconcile it and so on. Whereas we use the smart contract to actually move the money and execute it.
So someone who is more active is actually better for you, probably.
Exactly. The more transaction you have, the more we can automate in there.
Yeah,
but I think this is something that we are like still validating in there, in the sense that some like, oh, that's so cool, I don't have to do it, and so on. Whereas others, we got feedbacks like, oh, well, if I can just pay someone to do it, I have, I don't know, 20 employees in my company, I just take some people doing it. Why would I pay for a software? Like, well.
That's a very good, it's a very good problem to validate. I mean, it's a good box to take care of this week, probably. And how do you think you can validate this?
Yeah, it's always, you can ask to your customers, and then maybe you can find out that is it either not the right problem or it's not the right customer, and then you just go to asking to another.
But you have paying customers, right?
Yeah, and of course, probably it's a correct problem for them, and then.
Can you find more of them, or is it difficult because they're very different from one another?
The thing is, from the outside, it's very difficult to tell how big the fund is if I'm not open about it, and how many transactions there are. Like you just go in there, you just see Hans Paul Capital, and then they use stable coins. Is it family capital, proprietary or balance sheet, or they have 20 investors? It's.
Do you know this company, Numerai?
No, Numerai.
look it up if it can be helpful. I know the founder. They actually is a hedge fund managed by AI. So, and they started with smart contracts some years ago, before AI was popular, and now they do more AI than blockchain. But in case it can be helpful for you to talk to them, or I can send them a blurb, and you know. Anyways, but yeah, this is good. I think we can move forward to Guillermo, but very good problem to validate in the next few weeks. It's not an easy problem. I agree. I mean, it's not an easy assumption to validate. But probably customer interviews, surveys, and willingness to pay is your way to go. Good. Good job.
Thanks.
Guillermo?
All right. Okay. So I think I'll start with the riskiest assumption with unfair advantage. As I mentioned before, that being the first and locking in banks and their liquidity, our know-how, because we got where we are after a long navigation and a couple pivots, and it's not easy to spot that. So the assumption is that others will take longer to get where we are, but that's risky, because once we uncover it, it can be easy to get where we are. So that's our unfair advantage. Those two, I think it's a risky assumption. So we have like a very improved or solid moat for us. Second is actually similar to Fium guys. We like the exact problem inside the bank. We don't know in detail the exact cost that they suffer now, and what would be our cost comparison, you know, side to side. We're talking with them. We think we know, but the more we talk with them, the less we know. Like, it's every single meeting, there's something comes out that, oh shit. So one thing is theoretical. I think we're on the good track, and I think there are massive savings there. But exactly what and to which department and how, like in very detail, this is something that we don't know 100% yet. That's the reality.
Sorry, is this the value proposition for them?
Yes, it is. It is because right now, if they want to connect, so it's a highly fragmented landscape. They know they have to.
Yeah, I agree with you. I didn't hear the first part. So how are you going to test this, and which one you want to test this week?
Well, because this is actually based on Friday discussion with a bank that told us, okay, guys, yes, awesome, but tell me exactly where is going to be, like exactly where is going to be my cost savings and for what, and how, because there are two parts. The issuance of the security is based on cost savings because they will save, but then on the distribution side, they actually don't care about the cost. They just want to know how much will I make. And give me the breakdown table, and how am I going to make money exactly where, and that's, you know, okay, we do all this exercise, and we think we are in ballpark, but now we're preparing, and we need to meet them next week, and we need to show the table like exactly where.
Yeah. Is this week or next week the meeting?
Next week.
Okay. Yeah, I think you're doing a good job. Like, I remember I had the same conversation with a law firm or something, and we showed them like the Google Sheet with the, you know, which type of contracts do you need to review, and for each type of contract there is a different number of hours. NDA is faster than license agreement, right? So I guess you can do the same based on the assets or things. You can make like an interactive dashboard. Doesn't need to be fancy. You can make it on Google Sheets and show them based on the inputs they give you how much time they save and how much money, they save or they make, which goes to Mark's point. I'm kidding.
Yeah,
I mean,
having a dashboard will be awesome. Yeah, that's a good idea.
But yeah, I mean, it can be something scrappy, like the Google Sheet. You start with this, and then you plug numbers, and then things may work. But yeah, it doesn't need to be perfect. But they want to see the numbers probably. And I believe this is more important than validating the unfair advantage right now.
Yes, yeah, for sure. Yes. Agree.
Cool. So write this on the group, and hope you found something useful and maybe some sparkles of ideas during today's session. And yeah, you're building good stuff. This is my calendar. If you want to have a one-on-one in the future, this week or next week, I can drop it in the chat. I have some connections in Europe and in the US, so feel free to, to search through my network and ask for introductions if you want. Those are some names that came to mind, for you guys, because I know some people in the fund management space, in hedge funds.
Thanks for sharing. Yeah.
Energy, I'm not sure, but for sure I know people. But apart from this guy building this Bloomberg for ESG in Paris, and and for the banks part, I know a lot of crypto people, again, because I spent some time at the Crypto Castle in San Francisco with Jerry McGardner, the founder of Augur, and there was also Vitalik there at the beginning. I was not there. I came a bit after Vitalik, but it was nice times. That's where I learned about Solidity and smart contracts. But so happy to help if I can, but I don't have a clear connection in mind right now, Guillermo, for you, but yeah.
Maybe on the VC side could also be some.
Of course, yeah. I have a bunch of people I pitch to, and some of them are investors, some of them are not, so I can see if there is a match for you. Yeah.
Awesome.
Cool.
Well, thank you very much.
Thank you, guys.
Thanks, Hans.
Hope you find
Interesting session.
Yeah, no, thank you to make it interesting, actually. Otherwise, it's boring, just presenting this. Allegra, are you still with us? Shall we just close the call?
Yeah.
Okay.
Yeah. Guys, I text you on the chat if you need anything or for feedback or anything, even for the next sessions, just text me on WhatsApp.
Sorry, I didn't see your message. Thank you, Allegra.
No
Cool,
worries.
guys.
Ciao.
Thank you so much.
Ciao, everyone.
Have a good day.
Thanks,
Ciao.
Hans. Thank you.
Thanks, Hans. Ciao, Allegra. Ciao, tutti. Bye, everyone.
Bye.